Did you know that a single $10,000 investment into the S&P 500 with dividends reinvested would have grown into $33,598.06 over the past 10 years? That's a total return of 235.86%, or an average of 12.88% per year, outperforming 87.42% of other investors. But today, I've got a list of 5 dividend stocks that have blown that performance out of the water, and I've got metrics to support they could keep on delivering.
Contraption, she's contrapting.
Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and congratulations, you just found the only weekly stock list you're ever going to need as a dividend investor. Every Friday at 8 a.m. Central Standard Time, I share a fresh batch of market-crushing dividend stocks absolutely free. All I ask for in return, make sure you're subscribed and give that like button a click to help me out with the algorithm. Now, you've probably heard the saying, past performance doesn't indicate future success. And while that's true, I personally prefer sticking with companies that have been there, done that, over pure speculation plays you might find elsewhere. At the end of the day, I'm just a guy on the internet, so to help me build some credibility, I'm going to be transparent with all the stocks I've mentioned in this series and how they've done since I mentioned them. That way, you can decide if I might be onto something with these lists. So with that being said, let's dive right into number 5 on this week's list, CDW, stock ticker CDW. This is now CDW's 7th time being mentioned on this channel in these types of lists. They've been here 4 times in the Power 5 and 2 other times in the top 5, once as number 1 and once as number 2, and today they're coming in at number 5. Since I mentioned them back on November 18th of 2022, they have actually underperformed the S&P 500 over that duration, but let's go ahead and get an updated idea on the numbers that CDW presents and see how they've done over the long haul over the last 10 years. CDW is a quarterly payer in the technology sector, paying $2.48 per share per year with a forward dividend yield of 1.11%. CDW has been paying and growing their dividend over the last 11 years. They have a 3-year dividend growth rate of 15.75%, a 5-year dividend growth rate of 17.48%, and a payout ratio of 22.7%. At the time of recording, CDW is trading 15.42% off of their 52-week high. They have an ex-dividend date of August 26th with a payout date of September 10th. And looking here at this chart, you'll be able to see the growth of a $10,000 investment both with and without the dividends being reinvested into CDW and into the S&P 500. Over the past 10 years, CDW would have turned into $75,889.84, outperforming the S&P 500 by $42,291.78. Down at the bottom, without reinvesting those dividends, CDW would have still turned into $72,014.64, which outperforms the S&P by $41,195.33. And the difference between reinvesting and not reinvesting those dividends is $3,875.20. Coming in at number 4 on this week's list is UFP Industries, stock ticker UFPI. This is now the 5th time that UFPI has been featured in these types of videos, with the first 3 being in the Power 5 series and the last 2 being in the top 5. It looks like since the first time I mentioned this back on May 26th of 2023, UFPI is actually outperforming the S&P 500 over that duration of time. So let's get a refreshed update on where the metrics are with this stock. UFPI is a quarterly payer in the industrial sector, paying $1.32 per share per year with a forward dividend yield of 1.11%. UFPI has been paying and growing their dividend over the past 12 years. They have a 3-year dividend growth rate of 31.83%, a 5-year dividend growth rate of 27.1%, and a payout ratio of 16.11%. At the time of recording, UFP Industries was trading 13.22% off of their 52-week high. They have an ex-dividend date of August 30th with a payout date of September 16th. And up here at the top, we have that $10,000 investment while reinvesting the dividends. UFPI would have brought back $82,521.85, outperforming the S&P by $48,923.79. Down at the bottom, without reinvesting those dividends, UFPI would have brought back $77,580.23, outperforming the S&P by $46,760.92. And the difference between reinvesting and not reinvesting those dividends is $4,941.62. Coming in at number 3 on this week's list is Murphy USA, stock ticker MUSA. This is actually the first time I've mentioned this stock on this channel, and this is the unofficial gas station of yours truly because they have the best local gas prices. So let's go ahead and actually dive into the rest of their numbers and see if they're actually a good company to invest in. Murphy USA is a quarterly payer in the consumer discretionary sector, paying $1.80 per share per year with a forward dividend yield of just 0.35%. MUSA has been paying and growing their dividend over the past 5 years. They have a 3-year dividend growth rate of 30.33%, and because they've only been growing it for 5 years, they don't have a 5-year dividend growth rate yet, but they do have a payout ratio of just 6.52%. At the time of recording, Murphy USA was trading just 1.93% off of their 52-week high. They have an ex-dividend date of August 26th with a payout date of September 5th. And looking at this chart over the past 10 years, MUSA would have turned $10,000 with reinvesting your dividends into $98,699.75, outperforming the S&P 500 by $65,101.69. Down here at the bottom, without reinvesting those dividends, MUSA still would have turned into $97,605.84, outperforming the S&P 500 by $66,786.53, and the difference between reinvesting and not reinvesting those dividends was $1,093.91. Before we get to the rest of the list, if you guys haven't already, make sure you guys are leaving a like on the video as it helps me out with growing the channel. And if you guys want to leave a comment down below, I'm curious to know if you guys own any of the stocks mentioned in today's video and how they're doing for you. And if you don't own any of them, let me know which ones piqued your interest. But now let's get to number 2. Coming in at number 2 on this week's list is Advanced Drainage Systems, stock ticker WMS. This is now the 3rd time on this list. The first time was in my Power 5. The last time was in my top 5, also at the number 2 position. And then we have today. WMS, since the first time I mentioned it back on May 26th of 2023, is outperforming the S&P 500. So let's go ahead and get a refreshed update on where this stock currently sits. WMS is a quarterly payer in the industrial sector, paying 64 cents per share per year with a forward dividend yield of 0.43%. WMS has been paying and growing their dividend over the past 10 years. They have a 3-year dividend growth rate of 15.14%, a 5-year dividend growth rate of 11.94%, and a payout ratio of 8.56%. At the time of recording, Advanced Drainage Systems was trading 19.6% off of their 52-week high. They have an ex-dividend date of August 30th with a payout date of September 13th. And looking at the chart, you have $10,000 without reinvesting your dividends. WMS would have brought back $104,336.63, which outperformed the S&P by $70,738.57. Down at the bottom, without reinvesting those dividends, WMS would have still brought back $96,292.19, outperforming the S&P by $65,472.88, and the difference between reinvesting and not reinvesting those dividends was $8,044.44. And here it is, number 1, the stock you need to know about. Coming into number 1 is Kinsale Capital Group, stock ticker KNSL. This is now the 3rd time I've mentioned this stock on this channel. The first time was in my Power 5. The last time was in my top 5, also coming in at number 1, and then you have today. Going back to the first time I mentioned this back on February 24th of 2023, KNSL is still outperforming the S&P 500, so let's go ahead and get a refreshed update on the numbers behind this stock. KNSL is a quarterly payer in the financial sector, paying 60 cents per share per year with a forward dividend yield of just 0.12%. KNSL has been paying and growing their dividend over the past 8 years. They have a 3-year dividend growth rate of 13.19%, a 5-year dividend growth rate of 14.1%, and a payout ratio of just 3.39%. At the time of recording, Kinsale Capital Group was trading 11.85% off of their 52-week high. They have an ex-dividend date of August 29th with a payout date of September 12th. And looking at this chart, we actually have a little bit under 10 years worth of history here, and the numbers behind this one are crazy. A $10,000 investment just over 8 years ago into KNSL while reinvesting your dividends would have brought back $270,133.28, outperforming the S&P 500 by $240,798.75. Down at the bottom, without reinvesting those dividends, KNSL still would have brought back $264,273.26, which outperforms by $236,609.42, and the difference between reinvesting and not reinvesting those dividends was $5,860.02. With that being said, if you made it here to the end of the video, but you're watching this on or after August 26th of 2024, make sure you're subscribed with the bell turned on. The reason being, some of the ex-dividend dates I mentioned might have already passed, which means you just missed out on those dividends. While that's not the end of the world, waiting 3 long months for the next dividend really sucks, so don't let that tragedy happen to you again. Before you go, don't forget to comment down below and let me know if you own any of these stocks and how they're doing for you, and if any of the stocks from today's list piqued your interest. If you enjoyed this video and want to see more, make sure you check out last week's video right here. But until next time, see you.